Hey, what is going on, guys, and welcome back to the channel. So first off, what we're going to go into in this video is we're going to go into investing. Specifically, actually, this video we're going to go into how to analyze a chart. This is going to be more a trading video. We will go into an in-depth investment video here in the future. If you didn't already grab your free stocks, there are two links down in the description, one for Robinhood, one for Webull. Just go ahead and deposit your first $100, and on Robinhood you'll get one free stock, and Webull you get up to four. So, all right. So first off, let's go into a couple things. How to analyze a chart. What we're going to go into in this video is resistance points, support levels, consolidation, restarting an uptrend, and when you want to re-enter a buy. Okay, these are all super important things to talk about. To be honest, I actually go a lot more in depth than this, but I can only cover so much in one video. Actually, we're probably going to move over to my laptop here in just a minute, but first off, go ahead, hit the like button and the subscribe button, because as I said, we do these videos absolutely for free for you guys, so I'd really appreciate if you just went ahead and hit that button. That's a way you can pay me back. All right, let's get right into the video.
All right, what is up, guys? At this point, you should be able to hear and see me. All right, so we're going to go through a couple different things, and I'm going to screen share so that you can actually see some of this stuff for yourself. Okay. Okay, right here, you're going to see a chart, okay? Now, we're going to go into a couple different things. Resistance points, okay? Resistance points are points where, sorry about that sound effect, guys. I'm pulling up another chart actually right now as well, so we can analyze that too. But resistance points here are good for instances to show you a resistance point right here, okay? So Alibaba is obviously a stock, but we see a solid resistance point right here, okay? As this starts to peak right here at this 230 level, okay, it stops, okay? Now this is what we consider a previous resistance zone, okay? So when it starts an uptrend again and fails to pass this 230 level, we say that's because it hit a resistance zone, okay? And that resistance zone was this 230, this 227, 230. It failed to pass that because of the resistance zone, okay? Now, there may have been other factors involved, but trading-wise, that's how we conceptualize it, all right? Now, what we're going to do is we're going to look at possible or our support levels on Alibaba right now, okay? Our support levels can vary, okay? But a support level, for instance, is where, see if I can find a really good support level. Okay, this is a really good support level for Apple, okay? This $108 price range has hit it a couple different times, and it has stayed there. It hasn't really dropped below that level. So we'd consider 108 to be the support level of Apple currently within the past couple months, okay? And you can see it's touched it like 3 times, like right here, 1, right here, 2, okay? Right here, 3, okay? We'd say there's 3 touches right here at least, so that's a very common support level, and a good place to possibly buy Apple may be along that support level, okay? That could be a possible good trade. Now, once again, I will get more in depth into how to enter a trade, what to look for when to buy a better trade here in the future, but this is what we're jumping into for now, okay? Now, consolidation. Let's jump through what consolidation is. Okay, so consolidation is any time where a stock was spiking and then it comes back down to a grounded level, meaning this right here, all this, it coming down kind of to this point is all consolidation. That means a stock is now instead of going up, it's coming back down. Okay, it's getting more grounded to a level that it makes more sense for the stock usually. Okay, And I'm actually going to give you guys a little pointer here, if you stick around to the end of the video, something that you could use to possibly make money here in the next week. So stick around for that. Now, let's jump through a couple more things here. We want to walk, yeah, let's do restarting an uptrend, okay? This is one of the most important things you need to understand about investing or trading. It doesn't matter, okay? It's all pretty much the same because your entries are important. You don't necessarily make money when you just sell. You make a lot of money when you buy at a good price, okay? It's kind of like when you buy houses, for instance. If you were to buy a house and it's on the market for 50,000, but it's worth 120,000, and all you had to do was, do a loan on it and sign those papers. The second you bought it for $50,000, you technically made $70,000 worth of equity. That is the same exact thing with stocks. So we want to buy when a stock is down, but we want to also buy when it restarts an uptrend, okay? We want to buy undervalued stocks, okay? Stocks that have maybe been consolidating for a while that have now started an uptrend. Why do we want to buy in an uptrend? Because it's easier to make money when the trend is in your favor, no matter what, okay? Let's go through a couple examples. All right, so here we have Apple, okay? And we can see the past 5 years with Apple, okay, uptrend, uptrend, uptrend. As soon as it started re-uptrending right here, see this? This is called an uptrend, and that's called the retest, okay? So when it went to 61.9 and then came back down for a second to 60, and then it started spiking back up again, we wanted to buy on that spike, right? As soon as it started spiking again, we wanted to buy because that's what's called restarting the uptrend, okay? And when it restarts that direction, you want to buy right then, but you want to wait until it starts making what are called higher highs, okay? A higher high, for instance, maybe this level right here, okay? Where the previous high was $45, it came back down to 40, and now it spiked to 47, okay? That is a higher high. That'd be a place where you'd probably want to buy. Maybe you want to buy in the next dip, but you want to buy when it starts creating a trend, right? It is a lot easier to make money in a trend. Okay, it is what it is. I don't know why it is that way. Don't really question it. It's kind of how it is. So same thing when something starts going down. A lot of times it'll be easier just to ride that thing down than it is to go the opposite direction, because and let me try to explain this for you. It's very hard to say that what is this? At $80 and yeah, at just over, let's say $81.24, Apple is going to spike straight down. It is very hard to call that, right? But it is very easy to say, okay, Apple's restarted an uptrend at $60. We waited for it to stop dropping, and now it has started this uptrend again. We bought back in at 67, and now we rode it until 120, okay? That's a lot easier to do that than it is to say at exactly $124.81 that Apple is now going to drop, right? It's a lot easier to do that. So instead of trying to call tops and bottoms, which people try to do all the time, stop trying to call tops and bottoms, wait for it to create a trend in the market, and then enter, okay? So we literally just went through retesting the trend, which is basically where it restarts kind of the pattern again, like an upward pattern or a downward pattern. Either way, because you can trade up or down, doesn't matter. All right, but when it restarts the trend and after it has been retested, meaning it spiked in the opposite direction for a second, and then started spiking back up in your favor, whichever favor that is, whether it's up or down, whichever direction you are trading in, that's when you want to enter, okay? Now, I personally only buy companies that I am very interested in owning long term as well. Because now let me explain this to you. If I, for instance, am looking at trading a company long term, right? I'm looking at buying a company long term. I don't care if in the next couple days it were to go down, right? I'm not nervous about it, right? Because I believe in it long term. So no matter as long as I got a really good buy on it, I'm willing to hold that for a month, 2 months. And that's the way you have to look at it. And you need to buy positions and put in a reasonable amount in positions that you don't get nervous holding that much. Meaning, if you were to put $1,000 in Apple stock, you are not nervous that tomorrow, if it went down a little bit, that you'd sell out, because that's usually when you lose money. Instead, it is a much better idea to buy the dip, and when it's down, you go ahead and you what's called cost average. Okay. All right. So when I trade, I usually use trading to enter, right? I will use trading to enter my buys, and then I will use earnings, PE ratios, revenues, and projections to pick the stocks that I'm going to enter on. Meaning I have a watch list with stocks that I just believe that are going to do very well within the next 5 to 10 years, and those are the only stocks I trade. Okay, and I trade 5 to 10% positions on them. I will swing trade them, and I will hold them up to a month, sometimes 3 months. Actually, some of the longest positions actually are long positions on these. They're coming up on a year, but there are a lot of positions where I literally just hold them for a few months. Okay, and I'll end up making a 30 or 40 or 50% return on that in a couple months, and that has done very, very well for me. Okay, as I said, I'm no financial guru or anything like that, or any type of advisor. So if you are thinking about getting into trading or investing, don't come after me if you go ahead and lose money. Only put money in the market that you are willing to lose. Okay, that at the end of the day, like, if you lost money in the market, you understand you only lose money when you sell. Okay, so if you're in a company that you believe in long term, and you believe for a long time that this company is going to consistently do well, there is usually no reason to sell right away. Okay, now my advice for you is create a watch list. Okay, create a watch list that you can watch every single day. When you get up, you look at these stocks and you see, hey, are we in an uptrend? Okay, are we creating some type of uptrend? Were we in a downtrend for a while? And start getting familiar with what the normal prices are of these stocks. After you've gotten used to this, then what you want to do is you want to start looking at actually when to buy, right? You want to be looking at, okay, we just had good PE ratios, we had good earnings, our projections looked really good at this stock. Okay, so we're going to watch these 10 stocks, and you know, 2 of them are in a downtrend. As soon as they start uptrending again, we're going to enter a position. A great example of a position that may have possibly restarted an uptrend right here is Alibaba. Okay, you see this where it dips and starts dropping. Okay, it started uptrending again. Now we would wait until we have a retest where it comes back down, maybe into an area right in here, maybe like a 260. 255, no, probably a little higher than that, probably like 260, 265, and then assumes its trend continuation back up. That's when we would buy, because then once we've retested the pattern, we can actually conclude that it is now a trend. Okay. All right, anyways, guys, I don't want to kill you guys with this video. This is a lot of information I threw at you at one time. If you've gone ahead and got some value out of this, as I said, please go ahead, hit the like button, hit the subscribe button. It really makes a difference in the channel and who really gets to see our videos in the algorithm. We don't ask for a lot, but I would really appreciate that. And if you did want your free stocks, down below there will be a link where you can go ahead, sign up today. And until next time, guys, see ya.